Welcome to this episode of Been There, Done That. My name is Patricia Baronowski-Schneider, CEO of Pristine Advisors, investor relations, public relations, and media relations and marketing firm with over 3 decades of experience working in a wide variety of niches across the globe. Okay, so someone asked, how can you invest starting small without losing all your money? Okay, when it comes to investing your money, there's no one-size-fits-all approach. The best way to invest will vary depending on your individual circumstances and your goals. However, there's some general principles that can help you make smart investment choices. So here's a few tips on how to invest your money wisely. 1, have a plan. Investing without a plan is like driving without a map. You're going to get lost along the way. So before you start investing, take some time to figure out what it is you want to achieve. Do you want to grow your wealth over long term? Are you looking for more immediate results? How much risk are you willing to take? Once you have a clear investment goal in mind, you can start to develop a plan to reach it. Then start small. If you're new investing, it's best to start small and gradually increase your investment amount as you become more comfortable with the process. Putting all of your eggs in one basket is never a good idea, so don't invest more than you can afford to lose. That's just the nature of the game with investing. Then diversify your investments. One of the most important principles of smart investing is diversification, which refers to spreading your money across different asset classes and industries. This can help you reduce risk by ensuring that your portfolio is not overly exposed to any one particular sector or company. So for example, if you only invest in stocks, you can lose all of your money if the stock market crashes. But if you diversify by also investing in bonds and real estate, your portfolio will be much better protected against market volatility. Then review your investments regularly. Investing is not a set it and forget it proposition. You need to stay on top of your investments and make sure that they're still aligned with your goals. As your circumstances change, such as maybe you get a raise or you have a baby, whatever the case may be, your investment strategy may need to change as well. At least once a year, take some time to review your portfolio and make sure that it's still working for you. Then, if worse comes to worse, seek professional help. If you're not sure where to start, consider seeking professional help from a financial advisor. A qualified advisor can help you develop a personalized investment plan that takes your unique circumstances into account. Following these tips will help you make smart investment choices and grow your wealth over time. Then, I don't know if you're familiar, but you can actually trade where the stock market's going up or it's going down. It's called puts and calls. So think of a phone. You want to call up when the stock market's going up. You want to put the phone down when the stock market's going down. So there's ways that you can set up trending algorithms. So say, for example, you're a 20, 50, and 200-day moving average, if you're doing that sort of thing. You want to say, okay, is it in a range? Yes. So say maybe there's ways that you can kind of set up with your moving averages, for example. There's so many different algorithms that you can use for trading. Okay, so for example, if you could buy puts or calls, so if you use your 20, 50, or 200-day moving average, so maybe when the price touches one of the first ones, maybe the 20 or the 50-day moving average, you can buy on the dip. Your trigger bar is the first one that touches on the average. Then when it goes above the trigger bar, you would buy it. So there's 3 rules for the trend, 1 rule for the entry. So for example, if the average price crosses over on the bear side, the bear market, you can't bear the market, so it's going down. But the price rallied, which is a false start. So this is why you would wait 20 days from the crossover. Then when it rallies down, it's time to get in and profit on the next downward dip. So 20 days after it crosses over the 50 and the 200 would be a good time to buy. So you have buyable dips. You want to wait for the crossover. Confirm the trend. You want to wait 20 days. See that the price is pushed above all 3 moving averages, and then look for those dips worth buying. Then you have your trade management. You want to put a stop loss, and that's basically saying, say for example, I expect the price to go to $20. If I'm buying a call, I'm expecting the price to go up, so I want it to go to 20, but I'm willing to take a $2 loss. So if my decision is wrong and it starts going down, once it hits 18, that's my stop loss. That means it's going to get me out of the trade whether I'm looking at it or not. But one thing I just want to point out, I am not a licensed broker. I am not giving any trading advice. I'm not giving any investment advice. I'm giving an opinion of just things that I've learned. But in no way, shape, or form am I giving you advice. I don't want to be legally held accountable if something went wrong. So just make sure you do your due diligence. You do this on your own. You seek legal or financial advice if necessary. And again, this is just my 2 cents from my own experience. I'm not giving advice. I'm not telling you what to do. I'm not telling you how to do it. And I'm not representing a licensed broker. As the title of my post says, been there, done that. I can assure you that in my 35 years of working in the industry, I've done it all, and I've learned from many mistakes. I've learned so much, and I can help you do what works best to get your story in front of the audience that matters most to you. Contact me to learn more about my story. You can find out more about me on my website at www.pristineadvisors.com, and that's ADVISERS.com. You can also contact me by email at pbaronowski@pristineadvisors.com. You can reach me by telephone at 631-756-2486. Until next time.